Hello again, traders. Dwayne Shopper there from DRFX, Forex and Trading. Gonna be taking a look at a recent ABC signal that was given on the Canadian Swiss franc, which I had warned traders was very risky to trade. Now, even though ABC signals are very common across the currency market and lead to aggressive movements, there was one key element of this ABC signal that made it too risky to trade. So, gonna be speaking to this key technical element and explaining why I believe it was too risky to trade either on my live account or on the demo account here as part of the September trading competition within the Dukascopy community. Now here you can see the screenshot of the 4-hour chart of this currency pair, where the market appeared to give us a strong ABC signal that was about to start a bullish movement as part of the formation of our pennant setup. Now, even though this section here, this bull candle was strong, and this section between the A and the B was also strong, the fact that we had a section here that was characterized by weak candles basically made this ABC signal a very risky one to trade. So this is why I believe that it had a very low chance of actually rallying, and that it was too risky to try and trade on my live account. Now, as you can see here on the live picture of what is taking place now, that warning proved to be accurate, given the volatility that we now see taking place following the formation of this ABC signal. So this weakness in this area here is something that many people would overlook because of the strength of this signal. But when it comes to consolidation, when it comes to candlestick formations, you have to pay attention to key elements that represent the candlestick formation that we're looking at and spot whether or not there's something about the signal that makes it weak and makes it a very low probability signal. So as you can see here, we would have been expecting the market to rally sharply, as it generally tends to do in response to ABC signals. But instead of that, we would have been caught holding a small trading loss as the market started to move sideways and become volatile as a result. So spotting these weak elements of candlestick signals is very important when it comes to the currency market, and especially if you trade using candlestick patterns, because even if this signal itself is strong, as in the case of that bull signal on the ABC setup, if the setup that is supporting that signal is too weak, then the overall signal, the overall setup, has a much lower chance of actually working out. It works the both ways as well. Even if the setup of the ABC signal was strong, but the bull signal was weak, then the overall setup would still have a low probability of working out. So both the setup and the signal have to be strong in order for the signal to have a very strong chance of actually providing a profitable movement. So this is very key when it comes to candlestick formations, Japanese candlestick formations and candlestick patterns on the daily and 4-hour charts, and across the currency market in general. So once we pay attention to these elements and are able to spot weak elements of candlestick signals, then we can avoid situations like this, where what appears to be a strong trading signal actually leads to volatility and trading losses. So until next time, traders, take care.